Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Friday. So if you're watching my videos for the first time, then please subscribe to my channel for regular market analysis and do check out the Forex analysis playlist on my YouTube channel for the analysis of other pairs like Euro USD, GBP USD and many. So let's get started. So this is the 4-hour chart of gold USD in front of us right now. And as we all know, on Monday, market formed a huge red candle. When market shattered a little bit, market got a huge shock because 1750 was the support of the market, and market broke the support and started trading below. And market took support at 1690 level. So 1690 level became the new support for the market, or new strong support for the market. And this support was important for the market because it was a support from the weekly chart. This is a weekly chart of gold US dollar, as you can see here. So previously also in the month of March, when market was facing selling pressure from above, 1690 was the level that provided support to the market. So one thing is very much certain to us, that on the chart of gold USD, 1690 is the strongest level right now in front of us. In case there is a sudden selling pressure in the coming days also, 1690 okay, 1690 will be the level that will provide bounce to the market. But right now you can see that things have changed a little bit, because after touching the 1690 level, market bounced immediately, and after that market was in the consolidation here for a while. Then right now the most important thing is that right now you can easily see that market is trading above the resistance again. So listen to me carefully now. Okay, try to understand the scenario here. Okay, how the market has changed. Previously this was the support, then there was a sudden selling pressure on the market, market broke the support. Then the same support became the resistance, and now the same resistance has again become the support of the market. That's why I always say in my videos that wait for the market to give you the confirmation whether the support has become resistance or not, and the resistance has become support or not. Because in market you always see that resistance becomes support and support becomes resistance, and this is a clear indication. This is the best example I can see. The support is becoming resistance, and now you can see that the same resistance is trying to act as support for the market. See, this is like staying in a building. Okay, it's like staying in a building. Suppose if I'm staying here on the ground floor of a building and you are staying on the first floor of a building, okay, and obviously there is a roof above my head. So this roof above my head is the resistance of the resistance is a resistance for me, because I cannot directly go to your floor directly because I have a roof above. This is the resistance. But once I go to your house with the help of the staircase, let's assume I go to your house with the help of a staircase, then the same roof will become the support for me, because once I step into your house, the same roof has become the floor, and now the floor means the support. This is the same concept on the market as well. Support becomes resistance and resistance becomes support. This was providing resistance to the market, and right now the same level has become the support of the market. And right now you can see that though market is standing at the support level, but still there is not much movement in the market, because generally the thumb rule says if a market is in support, then it should obviously bounce, or if a market reaches a resistance, then it should go down. But you can see that though market is standing at the support, but there is not much volatility here. And if we go to Forex sentiment meter here, okay, you'll find the Forex sentiment meter on my website abhilashhazarika.com under Forex 101 section. So in a Forex sentiment meter, you can see that this is a gold USD. See, 43% retail traders have taken short position and 56% retail traders have taken long position. Yeah, generally 90% retail traders lose money, but still you can see that retail traders are also very much confused. 43%, yeah, it was 43, I guess. See, 43% retail traders have taken short position and only 56. There are not much difference. It's kind of a sideways market. Even the retail traders are in dilemma. They are confused. They are also not sure whether the market will be going up or going down. You can clearly see on the Forex sentiment meter as well. Because if you go to other currency pairs like see Euro GBP, 11% have taken short position, 88% have taken long position. OTCAT 19% taken have short position, 80% have taken long position. But on the gold USD, as you could see, 40% short and 56% long. So retail traders are also very much confused in which direction market will be moving. Okay, and one more thing, recently I have launched a pro trader membership program. Yeah, and you can be a part of my membership program for just a $15 per month, and I'll be sharing all the best opportunities available on the market. I'll be sharing videos like this. I'll be explaining in detail, and there'll be a separate Telegram group as well. You can just check this out. Okay. Anyways, let's get back to the chart. So the things are quite confusing here. Okay, and if we go to the chart of DXY as well, and as we all know, DXY, the US dollar, has direct impact on the market, and you can see that DXY is an uptrend. There's no doubt DXY is an uptrend, but if you just look at the particular portion here, or if you just focus on the DXY here, then you can see that DXY is also not in a good mood, because yeah, overall market is an uptrend, but you can see that the market looks tired. In this particular portion of the market looks tired. What I'm saying is that there may be some sell-off in the market, but as you can see, there are multiple support available in the form of Fibonacci as well, in the form of this trend line as well. So as the market is an uptrend, therefore obviously it will be bouncing again. But right now DXY looks tired. So if DXY is tired, if DXY also stays like this, then you'll also not see any proper movement on the chart of gold USD. So what should be a strategy? The strategy is nothing. You can just avoid trading on gold USD, because see, we do not have a proper picture here. We do not have a clean picture here. My theory is simple. We should never trade on a chart that we do not understand. We should never risk our hard-earned money on a chart that we do not understand. The chart of gold USD is not a simple chart right now. The things are complicated. We fail to understand right now what is going on in the market. The things are very confusing. Therefore, I feel that you should just avoid gold USD right now, because the picture is not clear. We can see that market is trying to take support, but still we do not have the confirmation yet whether this has become the proper support or not. Even if we consult the chart of DXY here, then also we can see that DXY is also messed up, kinda tired. Market is an uptrend, no doubt, but right now at this particular portion DXY also looks tired. Therefore I'll just say that if you want to if you're looking for some safe trades, then gold USD is not a safe trade for you right now. If you want to go for a buy here, you can go for a buy. You can easily go for a buy here. Your stop loss will be here, and this 50 moving average will be your take profit target. But honestly speaking, I'm not taking any trade, and I'll also not suggest to take any trade, because this chart is not for me. I do not risk money on a chart that I do not understand well. So if possible, try to avoid trading on gold USD right now. So this is it. Hopefully I've understood. If you have liked the video and found the video informative, give a thumbs up and subscribe to my channel for regular market analysis. Thank you so much. All the best. Take care. See ya tomorrow with the analysis for Monday.